Welcome back to On the Market, York Region's radio real estate show. Over to my co-host and our real estate expert, Asif Khan from RE/MAX Prime Properties with today's next guest. Asif.
And Tina, we're going to RE/MAX Prime Properties for our guest as well with David Markle.
How you doing?
David, welcome. Great. Thanks for joining On the Market.
Thanks for having me.
David, big news earlier this week with the Bank of Canada, not surprisingly, holding the rate at 5%. Tell us what you feel about that, and is that a bit of a window for buyers to take advantage of?
I think it's a moment to kind of keep an eye on. I don't think it's going to move the dial that much, but I do think it's going to get people ready to actually go out and get their pre-approvals done, go out and actually start seeing houses for whenever that rate drop's going to come. Because I think that is going to be where the flurry of activity we're going to get is as soon as the rate starts to drop, you're going to see those floodgates open and those buyers are going to be back in droves, and we're going to see the market, I think, kind of on the way like it was before.
So you're thinking a drop before a hike?
Yeah, so I think if the rates do come down, even a quarter point or a half, whatever that's going to be, it's going to be the beginning of, I think, a future hike, sorry, not a hike, but a drop. And so I think we'll see 2 or 3 of those again. I don't think they'll do it in one kick at the can. I don't know. What do you think?
I think so too. I think we'll probably, near the end of Q1, we'll probably see a drop of a quarter point or half a point, and I think that's going to kickstart the spring market or end of winter market. And I really do feel that this is the calm before the storm. So for those people that have been sitting on the fence for a long time, this is probably that window that they've been waiting for. We're not going to see those 20, 30, 40% price decreases that have been anticipated. I think we're on the rebound now, and it's time for them to get into the market.
Yeah, I agree. I think, there's a lot of people who have been waiting. They've been waiting and waiting and waiting. And you see that even in the activity where we're seeing, more houses go on the market right now. They're not selling as fast as they were. And also the price points, if you start to look at the price points, overall they had dropped. But if you start to look at detaches and semis, they're actually up in the 416. And, the only ones that have really dropped are townhouses and condos. The average condo price actually went down a little bit, I think 1.7%.
Okay, so the Bank of Canada remained steady in terms of the rate hike at 5%. Is your suggestion then to your clients that they jump in now as soon as possible?
Absolutely. I think right now it's a really good window because it's hard to predict what the whole next year is going to be. We'd love to say we have that magical crystal ball, but we really don't have a crystal ball. We just kind of go with the information that we have and try to make the best educated decision we can at the time. And right now, some of the buyers I have who have been waiting, maybe they're waiting to save a little more for their down payment to maybe avoid CMHC for the insurance. Those ones I've talked to and said, listen, in the next couple of months, I think rather than saving that, I think you should get in the market now because you're going to have less competition. You'll actually be able to put in a condition on financing or a home inspection, which is only to your benefit, and you'll have a little more buying power.
And speaking of buying power, if we're talking about affordability, this is probably a time where people should start thinking variable mortgages again, because for the last 18 months or almost 2 years, we've been telling them lock in because rates were going to climb. But at this point, with rate decreases on the horizon, this is probably a great time for them to get in to the home that they love, knowing that their payments are going to drop as the variable rate drops.
Agreed. Yeah. I think getting a variable right now, I think that's a good idea because if it goes down, you can lock in at some point. You don't have to, but if it's a fixed rate, you're stuck with that rate for the term, whether that's 1 year, 2, 3, 4, or 5. But as a variable, it's going to go down. And breaking that mortgage is only 3 months penalty.
Mm-hmm.
So.
And what about housing costs, Asif? What do you think this is going to mean to that?
I think right now, again, it's a good little window of opportunity for buyers to get in. However, as soon as the rate drops, it's going to get all of that pent-up demand back into the market, and that's going to put upwards pressure on price. And it's not only in the condo segment or the semi-detached or townhouses. I think this is also going to spur some activity in the detached market, which has been pretty dormant over the last year or so. And that's what caused a lot of the declines in average price. But we just spoke with Christopher Alexander, who was saying that there's a nominal increase projected for 2024. I think that nominal increase may turn into a larger increase right across the board.
And since there are no changes to the Bank of Canada rate, what does that mean to variable rate mortgage holders?
Well, I'd say right now, the variable rates, they are fluctuating a little bit. It depends on which lender you're going with, but they're all within line with each other. But I think as what we're going to end up starting to do is waiting for that drop. And whether that's going to be in the beginning of spring market or maybe towards the end of spring market, if they're going to hold off for that 6 months, I think that's wherever that's going to happen is going to dictate the rest of the year, right? That's going to be where the floodgates open.
So they should be cautious and perhaps expect to get into a fixed rate later on in the year next year?
Possibly. I think it depends on their situation too, right? If you're in a market where, fixed rates are good for some people because they really want to know what they're paying every month, right? That's a big deal. Versus a variable rate does fluctuate a little bit. That's why we call it a variable rate.
And we finally saw fixed rates because of the way the bond market is reacting. We finally saw fixed rates under 5%. And, we haven't seen that in a long time.
No,
so that's good news, even for people that are choosing the fixed rate in order to be able to know what your payment's going to be over the next 2 years, 3 years, 5 years. But again, I think at this point, it's probably going to be wise to talk to your mortgage broker and discuss all the different options of variable rates. Now, there's adjustable rates, and then there's the other interest rates that are variable where your payment could fluctuate. So you want to talk about all your options with variable rates with your lender and be able to choose the right product.
Absolutely, because there are a lot of different products of how you're going to pay it. Is there are you able on its anniversary of once a year to pay a lump sum towards your principal, which is really important for some of those people that do that. It's just always good to get more information.
And what can you tell us about those variety of lenders out there? Because I know we've talked on this show about A and B lenders. What exactly does that mean? And are those secure options for our listeners?
I think, there's so many different options because there's trust companies, there's A lenders, there's B lenders, and there's also private lenders, which had come into play over the course of the last 2 years because a lot of people weren't qualifying at that 2% above the rate mark for the stress test. So private lenders may take a bit of a hit now with the market returning to some sort of stability, but don't be afraid to look outside of the A lender space in order to get the right product. There's a lot more out there, and some of the B lenders or some of the alternative lenders even offer 30-year amortization. So that could also affect your payment and your affordability for that property. And this is a great time to explore all those avenues.
Yeah, it's very similar to when you go and lease a car or finance a car. You want to get your payment down to a certain number, and so you're going to stretch those payments out longer. And in some cases, that actually is a benefit, right?
Right, absolutely. So the Bank of Canada's next rate decision is set for January 24th. Now, I know you already said we don't have a crystal ball, but take out your crystal ball. And what do you think is going to happen in January?
I think they're going to hold again.
Yeah, I agree.
I think it's too early for them to start dropping. I really don't think we'll see drops until March or April, but I can see them holding again. I think it's very, very remote that they would increase. Inflation seems to be coming down. Inflation's a lagging indicator. So if it's down to 3.1%, I think it'll hover around that. And you got to remember that housing makes up for at least 1 to 1.5% of that inflation rate. Yeah. So as the rates start to come down for mortgages, you're going to start to see inflation get down to the 2.5 mark, which is their target.
Yeah, agreed. So I think right now you're going to find, I don't think January you're going to see, I think it's going to hold as well. And I think maybe even the next one as well. I think it's going to be a little bit longer personally, just because I know the Bank of Canada likes to move at glacier paces for any kind of change because they're looking longer term. They're looking 12 to 18 months out, not 2 to 3 months out.
Okay, we'll have you back in the new year and we'll see that prediction if it holds.
David, thanks for joining us. I mean, you've been in this market for a long, long time, and you've seen these ups and downs. You've seen the return to a normal market. If our listeners want to connect with you and ask any questions about what to expect in the new year, how do they reach you?
I'm pretty easy to find if you go to davidmarkle.ca, or you can give me a call on my cell.
Awesome. David, thanks for joining us.
Thanks for having me.
When we come back, your real estate questions. This is On the Market on 105.9 The Region. Stay with us.
Need to connect with Asif Khan from Remax Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca. Now back to On the Market on 105.9 The Region.
Welcome back to On the Market. Your questions for Asif Khan are next, and we begin with Sam in Thornhill. He wants to know how the open bidding process works. Asif, I'm sure we're going to get a lot of questions about this.
We are, Sam. Great question. And you know what? There's a lot surrounding the transparency. And the good news is TRESA really does enhance transparency around the real estate transaction. So open bidding is now part of that. The seller gets to choose what they want to disclose. So the seller may choose to disclose sale price or offer price. They may choose to disclose closing date, conditions, anything that the seller thinks that everyone should know about. That's what will be disclosed to all the parties in the multiple offer process. And that way you're going in knowing if it's price that's disclosed, you know that you're going in knowing what all of the other offers are offering. Now, this method has been used, and to use Australia as an example, it hasn't really decreased the price or the offering from people because it gets very competitive. And if you know that you're losing over $500 or $1,000 or $5,000 and you really want that house, now you know, whereas in the blind bidding process, you didn't know what the other offer was. So you may have lost out for $500 or $1,000 and you'd be kicking yourself afterwards for not knowing that. But now you know that. So you may not mind paying an extra $2,000 or $3,000. But the person that you're bidding against may also want to outbid you. So this could go on for a while, and it does have the potential to increase the sale price even more.
Do you think that sellers and their agents will choose to go this route?
I think they will, but we're hearing from some agents that they may put a clause into their offer that if the price is disclosed, they will opt out of the offer process and pull their clients out of that because they don't want to give that unfair advantage to some other buyers to know what that house is being offered and to be able to beat that. So I think as much as it protects the buyers that you're not going to outbid someone by $20,000, it does help the sellers get more value because of everyone knowing what that bid is. And if there's two people that really want that house, it could get a little crazy.
The next question comes from Paula in Markham. She is suffering from buyer's remorse, thinking that she overpaid for her home back in the spring of this year. What advice do you have for her to get beyond the regret?
When you buy a house, it's always time in the market. So, people don't buy and sell their homes every year, every 6 months. It's not like the stock market where you're watching it continually fluctuate. You're in there. If you love this home and this is home, you're going to be there for 5 years, 10 years, 15 or 20 years. And whatever price you paid at that time, you're going to make money on it. There's not a lot of inventory here. There's no fix in sight for that inventory issue that we're facing over the last 10 years or so. And your house is going to appreciate. So if you purchase this home knowing that this was going to be a home that you're going to live in for 10 years or 15 years or however long you may want to, stick it out and you'll see that the price that you paid and the price that it's going to appreciate to when you're thinking of selling, it's going to be night and day.
Do you hear these stories of buyer's regret often?
All the time, especially the day after, because you go back to work and people say, I would never have paid that much for it. And, you start having buyer's remorse and you think you overpaid because you won in a bidding war and you think, oh, maybe someone else didn't offer that much. The transparency issues, if it is an open offer bidding process, will ease that a little bit because you won by $1,000 or $2,000 rather than always thinking, did I overpay by $50,000? So that will ease it a little bit. But at the end of the day, you purchase a house to live in. as much as it is an investment. And that investment over time will make you money.
As a reminder, if you have questions for On the Market, hit send anytime to info@1059theregion.com. But Asif, if our listeners prefer to contact you directly, how can they do that?
They can always reach me at 416-985-5426.
If you missed any part of our show, go to 1059theregion.com or wherever you get your favorite podcasts, including Apple Podcasts, Spotify, Google Podcasts, Amazon Music, and Audible. I'm Tina Cortez. Thank you for listening.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426 or email asif@thehomeshop.ca.